Good day, everyone. Welcome to EDD 707 or Financial Management in Education with Dr. Ramon Paras Jr. I am Miss Chinimay Bukalid, your first presenter on this subject. I will be discussing the fundamentals of financial management in education with the subtopics, key concepts, principles, and theories of financial management in education. By the way, the examples or situations that I am about to share in this presentation are merely my own ideas and understanding based on the information I got from the references, which will be cited at the end. But I am willing to learn and open to any correction or additional information related to my topic. Thank you. So let's get started. What is financial management in education? Let's try to define each word and come up with a general meaning. First, financial. It is pertaining to monetary receipts and expenditures relating to money matters or pecuniary. Finance can be defined also as the art and science of managing money. Management. It is the act or manner of managing, handling, directing, or controlling. Education. It is the act or process of imparting or acquiring particular knowledge or skills as for a profession. It will help manage school finances, budget and accounting requirements, funding sources and schools' expenses, or purchasing requirements. In other words, finance management in education refers to the process of planning, organizing, directing, coordinating, and controlling of financial resources. Also, it can be defined as the efficient and effective management of funds in such a manner as to accomplish the objectives and goals of the organization. Next, our first subtopic, key concepts of financial management. First is budgeting. Budgeting is the process of creating a plan to spend your money. This spending plan is called a budget. Creating this spending plan allows you to determine in advance whether you will have enough money to do the things you need to do or would like to do. One of the most important concepts of financial management is budgeting. I guess most of us have experienced making a budget proposal in an organization. So, we are usually tasked to budget the money to see if it can still cover the expected expenses. Because spending money without a plan or without regard to the organization's collection can lead to overspending. Next is reporting. Financial reporting is the disclosure of financial results and related information to management and external stakeholders about how an organization is performing over a specific period of time. This is why we are tasked to do financial reports quarterly or yearly to monitor the financial aspect of the organization and to provide transparency to stakeholders. Just like in our school publication, we are opt to update the total amount of collections, though it's voluntary, to liquidate expenses and monitor remaining money. Accurate and regular financial reporting helps you know exactly where you stand financially, how different areas of your company or organization and different initiatives are performing and what your resources are. It helps us monitor the finances and provide transparency to stakeholders to avoid discrepancy. Next, the cash flow management. The cash flow statement shows the cash moving into an organization. It assesses whether money inflows match money outflows. Cash inflows refer to the money which comes in the organization, such as collections, income, or sales, while cash outflows refer to the money which comes out of the organization, like expenses and payments. In other words, cash flow management is also called liquidity. It is the ability of an organization to pay debts as they fall due. I guess it's normal for an organization to have debts or liabilities at times, especially if the budget or the collection expected got delayed or there were urgent concerns that need to be addressed. Next subtopic is the principles of financial management in education. First, we have consistency. Consistency principle means that accounting methods once adopted must be applied consistently in the future. Also, same methods and techniques must be used for similar situations. It implies that an organization must refrain from changing its accounting policy unless on reasonable grounds. If for any valid reasons the accounting policy is changed, an organization must disclose the nature of change, the reasons for the change, and its effects on the items of financial statements. The main objective of the consistency principle is to avoid any intention from management using an inconsistency approach to manipulate the financial information so to ensure their financial statements look healthy. Just like when we are claiming our reimbursements from our seminars or office related travels. The accountant consistently follows certain guidelines and procedures in computing rates of expenses and allowances. If there may be some changes, it is clearly disclosed to the public through debit orders. Next, transparency. Transparency principle means that statement or information provided should be users friendly and clear. Everything should properly be disclosed, fully and freely available to public, and that should be easily understandable. Organization must be open about their work, providing information about activities and plans to all stakeholders, including the preparation of accurate and complete timely financial report. This is why every school or organization should have a transparency board for the public to be informed with the whereabouts of the school or organization's budget, activities, and expenses. Next is accountability. Accountability is the moral and legal duty placed on an individual, group, or organization to explain how funds, equipment, or authority given has been used. All stakeholders have the right to know how finance and other support are being used to meet objectives. When dealing with money on behalf of others, accountability is crucial. The people given responsibility to manage the money need to be able to show that they are being good stewards of what is entrusted to them. It is important that they are protected from being tempted to use the money for their own purposes. A good example would be the donations and support given by stakeholders during Brigada Escuela. Being accountable, an organization should produce accurate and verifiable record of how it has spent or used a particular donation, such a record that shows how much donations were received, how much were spent, and that all money were spent on the grant aided activity as agreed by the donors. Next is viability. Financial viability refers to the ability of an entity or organization to continue to achieve its operating objectives and fulfill its mission from a financial perspective over the long term. To be financial viable, an organization's spending must be kept in balance with the money coming in, both at the operational and the strategic levels. Viability is the measure an organization uses to determine their financial continuity and security. I guess a good example to this is when a school or organization plans to materialize a certain project, like school fencing, new equipment, or purchasing new equipment, and the like. It should be viable in finding means as to how to achieve its goal, may it be through solicitation or fundraising. Stewardship. Financial stewardship involves taking good care of the financial resources we are entrusted with to make sure they are used for the purpose intended. In practice, organizations achieve good stewardship through strategic planning, assessing financial risks, and setting up appropriate system and control. The SIP or School Improvement Plan and AIP or Annual Improvement Plan are being carefully crafted by our school heads, teachers, and staff to practice this stewardship. In here, they designate certain amount of funds and expected expenses to different organizations, activities, and projects as to address various problems. Through this, financial resources are being appropriately used. Next, integrity. Integrity means the quality of being honest and having strong moral principles. The integrity of any organization, financial records, and reports are dependent on accuracy and completeness of its financial records. Integrity is an effective operational principle for any employee and any institution as a whole. Not only will the embrace of integrity help the team work together efficiently, it will also be recognized by the public. Corruption or misusing funds is a big no in this principle, since it is against honesty. One good example in practicing integrity is to provide intact financial records and visible results as to where the money has been used. By doing this, can you can trust or you can gain trust and good relationship from others. Next is accounting standards. An accounting standard is a common set of principles, standards, and procedures that define the basis of financial accounting, policies, and practices. Accounting standards improve the transparency of financial reporting in all countries. The system of keeping financial records and documentation must be of international accepted accounting standards and principles. Any accountant from anywhere around the world should be able to understand an organization's financial accounting system. Accounting standards ensure the financial statements from multiple companies are comparable because all entities follow the same rules. Accounting standards make the financial statements credible and allow for more economic decisions based on accurate and consistent information. This is why we can't just spend the school MOOE to whatever we wish to. All schools have guidelines and bases for proper allocation of funds and has accounting procedures or policies to follow. We might hear our school heads clamoring that the school MOE for a certain month, for example, is not enough because there was an excess electric or water bill. So you were advised to shoulder your own travel expenses first and get reimbursed for the next month. Now, the way you make your decisions will result in either the success or failure of any organization. A very common tool that is usually used for making strong and effective financial decisions regarding a business or an organization is what we call financial management theory. So, the third subtopic that we have is the theories of financial management in education. First, we have Administrative Management Theory by Henry Fayol and Max Weber. Administrative management theory attempts to find a rational way to design an organization as a whole. The theory generally calls for a formalized administrative structure, a clear division of labor, and delegation of power and authority to administrators relevant to their areas of responsibility. This is based on the concept of departmentalization, which means the different activities to be performed for achieving the common purpose of an organization should be identified and be classified into different groups or departments such that the task can be accomplished effectively. This theory can be applied in financial management through having a functional organizational structure where tasks, power, and authority are delegated. This is being done to effectively accomplish tasks since it is being executed by people who are knowledgeable and adept in certain field, especially in dealing with financial matters. In schools, it is the principal or the school head who is leading the financial management and has the discretionary power, with a school accountant who acts as consultant. The productivity of the school largely depends on the management of the school head. Next is Human Capital Theory by Gary Becker. The concept of human capital theory recognizes that not all labor is equal, but employers can improve the quality of that capital by investing in employees. The education, experience, and abilities of employees all have economic value for employers and for the economy as a whole. Human capital is important because it is perceived to increase productivity and thus profitability. So the more a company invests in its employees, example in their education and training, the more productive and profitable it could be. An organization is often said to only be as good as its people. Directors, employees, and leaders who make up an organization's human capital are critical to its success. We can apply this theory in financial management since we have a budget allocated for trainings and seminars from the MOOE. School heads often invest or tap teachers who are in need to be trained and who are believed to have competence. There are times that the budget for seminars and trainings is not enough, sometimes because of the number of teachers that needs to be trained, but instead of preventing them to attend, school heads manage to accumulate budget from different sources like rentals from the school canteen just to let the teachers attend the seminar. Even in this simple situation, we can see how a leader invests on his people and how he manages finances to be more productive. Next is the Management Science Theory by Frederick Taylor. Management science theory focuses on the use of techniques to maximize the use of organizational resources to produce goods and services. In the area of finance, management science can be employed to help determine optimal portfolio allocations, borrowing strategies, capital budgeting, asset allocations, and make or buy decisions. These techniques pertain to computer technology like programming. Practitioners and researchers are able to use ever increasing computing power in conjunction with management science methods to solve larger and more complex problems. Like what banks do. They use programs for easy transactions. They can automatically deduct your monthly due from your salary, and you can easily track your account through an app. Everything is somehow paperless now. You can do things in just a single click. Another example is the school's budget. It can be downloaded once available, which can easily be monitored through the use of computer technology. Well, that ends my report or my presentation, and these are my references. I would love to hear your feedback regarding the content of my presentation because honestly, I had a hard time studying this topic, though it's just an introduction of our subject. Well, the harder it gets, the more interested I am to learn. Thank you for listening. Stay safe, everyone. God bless.